Okay, so Matt, let's kick it because we've got a lot to talk about this week. And last week we got the jobs report in, and the headline there, I think, was ultimately a good one. Non-farm payrolls rose 224,000 in the month of June, beating the market's expectations of 165,000. Now, I mean, we know that really the story when it comes to the jobs report, it really is all about the adjusted numbers. A few months from now, they'll look back, they'll make some adjustments, and that'll paint a little bit more of a picture of what really is going on. But generally speaking, feels like it was a pretty good report there. What did you take away from this? Worth noting too that the unemployment rate actually ticked up slightly. That's just really more of a math problem than anything else. But overall, what was your take on the report?
Well, I mean, obviously it was a big upside surprise, but it's. The point is that there's so much talk of a recession's coming, the economy's going to slow down, et cetera. But it hasn't really been reflected in the data. And a lot of people were expecting it to really be reflected in this June jobs number, and it just wasn't. So the market's really expecting the Fed to start cutting rates and to start doing it really soon, as in this month's meeting. In fact, there is a pretty decent chance of a double rate cut, according to the market. They were expecting either a 25 or a 50 basis point rate cut before this jobs report. And with great jobs numbers, it's really tough to justify cutting rates. It's really interesting to mention, however, that currently there's a 0% chance that the Fed won't cut rates priced into the market. I wouldn't be as surprised if they didn't as the market seems they would be.
Yeah.
But the biggest change is that the expectation for a double rate cut, a 50 basis point rate cut, has really gone down. It's gone down from 20% to a 7% chance based on kind of the futures markets over the past week in a direct response to this jobs report. So expectations are definitely kind of tapering as far as what the Fed's going to do, but I don't know if they've tapered enough, to be honest with you.
Well, and it seems like, I mean, to your point about the recession, I mean, we sit there and we talk about it. It feels like we've been talking about this market that's been overvalued for the better part of, 7 years maybe now. It feels like we've been having that conversation and we haven't really seen any type of a material pullback. Certainly that recession hasn't occurred yet. And I have a feeling that we're going to keep on talking about it, and then one day it's going to happen, and we're going to be like, see, I told you so. We were just waiting for it. I mean, it is – a recession is a matter of when, not if. But it really does seem like – it seems like today at least the politicians in D.C. are really trying to figure out a way to – not ever have a recession at all. And I mean, I guess I get that. I mean, but by the same token, I mean, we know how the market's ebbs and flows work, right? I mean, it's a cycle. And I mean, you do look at some of these companies out here today. I mean, these companies are doing great things, but a lot of these valuations still don't make a lot of sense. They're really baking in a tremendous amount of success with businesses that haven't really shown or proven any long-term sustained success. They just haven't been around that long. So, I mean, I'm kind of feeling like I really would love to see just the Fed sort of butt out of this for a minute and kind of let things go. Let the chips fall where they may, all right? I mean, we're at a point where I don't know that unemployment can get much better, right? And even still in today's job market, you still have people who are feeling like they're being somewhat left behind when it comes to wages.
Right. And I mean, I can understand, like you said, why, all the politicians in Washington don't seem to want a recession ever. No one gets reelected while a recession's going on. I mean, it's very tough
they do not.
So that's definitely easy to understand. And I can get the case for a rate cut. The Fed's there to maximize employment and control inflation. We have no inflation.
Yeah.
So from that part of the dual mandate, it's really tough to make the case that a rate cut's not a good idea. The Fed wants 2% inflation. They're not getting that. So a rate cut could theoretically help, boost that a little bit. But we are at pretty much full employment. Like you said, some stock valuations are just astronomical right now. There's some that I won't touch just on valuation alone. Not banks. Banks are actually pretty nicely valued right now.
Yeah.
But the other thing is, I'd love to see the Fed not cut rates. I'd like to see them save some ammunition for when there's actually a recession, like when we actually get some real negative data. So they have, right now they have 9 rate cuts they could possibly make to try to combat any slowing economy. I'd like them to save that for when the economy actually appears to be slowing down.
Well, right. I mean, so to that point there, okay, assuming we hit a point where the does hit the fan, if the Fed, starts utilizing all of the tools it has in its toolbox today, I mean, what if they run out of ammo when they really need it? I mean, what are the options that are left there? I mean, because I don't know that you really have a whole heck of a lot left. I mean, other than you just start, jumping back into that whole quantitative easing cycle, which I doesn't really feel like we've fully gotten out of that to begin with.
No, well, they're actually starting to. They've been winding down the balance sheet. They could potentially end that and cut rates at the same time if they want to kind of do kind of a neutralish option. But yeah, there's always quantitative easing, but no one wants it to get to that point. That's essentially like lowering rates past zero. It's like nobody really wants it to come to that. So I'd personally like him to keep a lot of ammunition, not just and as a bank investor, keeping rates a little bit higher for longer would be a good catalyst for bank earnings too. So I'd like to see them kind of hold steady, but it doesn't look like the market's expecting that at all. Right now, there's a 93% chance priced in of one cut, 100% chance of at least one cut in the July meeting. So the market's not really expecting them to hold steady.
Well, I guess we will find out soon enough.